Hello and welcome to our latest XDB Market Alert. Today I want to speak about some major moves that we've been seeing across some of our most popular markets on the back of this volatility that we've had in the Turkish Lira. So to start off with, we'll look at the USD TRY, and you can see we had a huge move higher to the upside last week. This culminated in a spike of more than 20% that we saw last Friday, and the market gapped higher and opened up, moving to a new high of above 7, around 7.12 in the late hours of Sunday night. Since then, we've had a bit of consolidation. In the last couple of days in particular, we have seen the Lira try to recover and price fall back lower, but we still remain well above those levels that we saw back on Friday. Now, the reason for these latest moves are basically due to escalating tensions between Turkey and the US. Taking it all the way back until May of this year, you can see here we had a sharp move lower when the Turkish Lira rallied strongly after there was a surprise 3% rate hike from the central bank in Turkey. Now, why the central bank in Turkey were hiking rates was to try and basically rein in inflation, and this was seen as quite a positive move for the markets ahead of the Turkish elections in late June. Now, the late June elections saw President Erdogan re-elected and also given more power essentially in his role as president. Since then, the bank has refrained from hiking interest rates any further, and you can see once we break above this level at 4.92 at the start of the month, the market really took off to the upside. And we had that huge move higher on Friday, which in terms of percentage moves was far bigger than the drop we saw in the pound on Brexit and also any of the currency moves we saw on the back of the US election. Now, this effect has spilled over to some other markets. If we look at the D30 cash here, you can see we had a sharp drop lower on Friday. A bit of consolidation at the start of the week, but today again we've had another strong move lower and the market's fallen back down towards these prior lows around 12,100. Now, taking a long-term approach to this market over the last year or so, you can see here I've got the 200-day SMA drawn on. We are back below this 200 SMA, and also quite worryingly perhaps for bulls and longs, this is starting to point lower. Really speaking, overall over this past 12 months, this is looking like a kind of range, and the uptrend that we saw for the previous years possibly has come to an end. And if we do drop below this 12,100, then there could be further declines ahead, but this previous swing low around 11,700 a possible area to keep an eye on if the selling does accelerate further. The US 500 has dropped lower today. You can see the market earlier last week came just shy of its previous all-time high at 28.78, where it peaked at 28.64, but we have pulled back since then on this concerns around Turkey. You can see price fell back in between the two EMAs I've got here, which is the 8 period as blue and the 21 period which is yellow, and today we could be getting quite a large bearish engulfing candlestick and a close below the 21 EMA for the first time in over a month. The US dollar has also been performing well on the back of this, and the euro has also come under pressure. Now, the reason for the euro dropping is potentially that if there's problems with Turkey that escalate even further, this will have a negative impact on the euro area as a whole. You can see euro USD dropped below this 115.10 long-term support last Friday, and after a bit more consolidation, we have fallen lower again today, and the market has now made a new low around the 113 level. This marks a pretty big decline from the highs we saw earlier this year around 125, with around 1,200 pips lost to the downside. And taking a longer term approach, we could have a big head and shoulders here with the shoulder, head and second shoulder, and 115.10 a possible neckline. And we are just finding a little bit of support here around previous resistance around 113. Finally, I want to talk about gold. In times of market panic, gold often performs very well. What we've seen here is more move into the US dollar, and the US dollar strength's actually weighed on gold. You can see gold took out key support around 12.05 and has had 2 large down days in the last 3, making a new low today of 11.77, which is the lowest that we've seen since the beginning of 2017. There's not much really in terms of swing support below here, and whilst the market is oversold according to the RSI, you can see we've got a reading in the low 20s here. It's worth looking back to previous times when the market has moved strongly lower, and we've had these oversold readings whilst prices continue to decline. For instance, here at the tail end of 2016, you can see the RSI is below 30, which is seen by some as showing oversold conditions, yet price continued to decline for quite some time. So until we see some positive price action here, and some bullish formations forming, then the path of least resistance does seem lower and we could continue further lower in gold. Okay, thanks for listening and best of luck if you're trading these markets going forward.